My job is to basically get your seller what they want, to get your buyers what they want, and to get you guys what you want, which is to close deals and make money. So I'm here to give you what you want. I got into sales in December of 2005. So it's literally been a full 20 years that I've been in sales. But I don't really sell anything. And I'm going to get back to that in just a second, what I mean by that. But the other saying that Zig Ziglar had, that I've lived by, and I've always said this, especially at the end of a deal, when I close a deal. What I will say is that, or what Zig Ziglar has said, and I will repeat many, many times, is that you can have everything you want in life if you help enough people get what they want. And that has become very, very true. Getting people what they want. This past weekend, I was watching a sales video, a presentation video. It was really a marketing guy. And I'm not going to bore you with all the details, but he was going through a pitch deck, right? This is what he does. He's like the Michael Jordan of pitch decks. He's going through a pitch deck. This company is selling some aircraft maintenance part, right? Or this treatment for aircraft engines. And their sales cycle goes from 8 to 12 months. And they're like, why is it taking so long? So they give this guy the presentation. The first 10 pages out of this 30-page presentation deck is all about them. What's their mission? What's their story? How did they get in the business? And guess what? The client doesn't care about all that. So what he changed it to was the first 10 pages being all about the problems that the client has. And one example, an analogy that he gave me that really hit home, and this is just last week and I'm finding this out, it really ties into what I said about Ziglar, is about giving people what they want. So he gave an analogy, right? Just imagine it's the old times. You're walking down some country road, some dirt road somewhere. You start hearing someone crying out for help. You look over, some guy's 30 feet down, got stuck in a hole, got stuck in a ditch, can't get out, screaming for help. Okay, so you're the first guy there. You come over there, you start saying, hey, well, I went to school at this university for 4 years. I have this degree in helping people out of holes. I got this ladder in my truck. It's the best ladder in the world. The guy's like, hey, I'm stuck in this hole. Just help me out. They're screaming out for help. That's exactly what your clients are doing. So I thought it would just be a valuable message to share with you as you guys are, getting into the industry. So again, that's a little bit about myself, and a little bit of my backstory. Here's what we do. We're going to look at what clients want, because that's all that really matters. If you think about this, and I'm going to break it down as far as what clients want from the sale of the business, right? Obviously, the seller, they want to sell the business. They want to make money. But what are they really saying to you when they come to you saying they want to sell their business, right? Some of these sellers are well organized, right? They've been preparing for this for 2, 3, 5 years. You got the financial statements. They've got everything documented. Their CPA's been involved. They got an attorney. They're ready to go. They just need you to find the buyer and sell the business, right? That's a great scenario. But as Nick will tell you, that's not always the case, right? Some of these sellers, they're getting older. They've been running the business the same way for 20, 30 years. They have done nothing to improve the business. Their financials are a mess. They're, living, basically using the business as their own piggy bank, right? And so they want you to clean everything up and just sell the business. I got one deal I'm working on for one of your guys right now. The guy thinks he's going to die in the next couple of months. He's had 3 or 4 heart surgeries. He's going to have another one. He wants to get out before it's too late, right? So they're crying out to you, hey, fix this problem, right? What does the buyer want? The buyer, of course, they want to get into the business. We know that. But what do they really want? They want to make sure that they're getting into a good business, that the sale of the business, the price of the business is what it should be, that they're getting a fair deal, that they're not just going to walk into this business and it's going to close up on them on day one. Now, that's you guys, right? That's your job to sell the business for the seller and help the buyer get into a company, obviously. But where do I fit in, right? And that's what I'm going to show you here, that I'm right in the middle of that whole thing between you guys being the buyer and the seller side. Because what am I doing for the seller? I'm out there convincing the lender why the business financials make sense and they should actually approve this business, right? That's the first thing that I'm doing. For the buyer themselves, I'm convincing the lender that this buyer is qualified. I had a deal that closed in December 31st of last year. We went to 4 different lenders before we finally got to the right one. Why did we go to 4 lenders? Because the first or 5th lender, the first 4 lenders didn't believe this husband and wife team who had a little bit of experience with fix and flips could manage a $7 million a year general contractor business.
Valid point.
Yes, exactly, a valid point. But they did have a good story. They had a good management team that they built around them.
Of course.
They had
And
some
that's what
experience.
So he has to package it all and sell the story to the lender.
To the lender.
So that's
Yeah.
what he does.
They had a great storyline. The sellers were going to retain 10% equity. They were staying in the business. All these things we had to present to the lender because the lender's not going to know all of this.
These are all direct.
No, these are all going to specific lenders. Yeah, and I'll get
he's
to
a
the
broker
process
for
just a second.
multiple lenders.
Yep, exactly. So I'm the guy in the middle that's presenting to the lender. I'm the guy that's getting the buyer's package put together, right? And that's here to make your job easier. So my job, again, I'm not selling anything, and I'll get back to that in just a second one more time, but my job is to basically get your seller what they want, to get your buyers what they want, and to get you guys what you want, which is to close deals and make money. So I'm here to give you what you want. And if I help you enough of you guys get what you want, I'm going to get what I want too, right? So let me go on to the next slide. So this is what the buyer and seller want from the sale of the business. This is not working. But continuing on with what these clients want, right? First of all, what does the seller want from the buyer? Besides just the sale of the business, I mean, obviously they want the money, but they want more than that. Some of these sellers, they want their legacy to continue, right? They got to find the right buyer to come in there and take their business. They may have employees of the company that they care about. But I just had a conversation right before this presentation. The buyers came in and fired all the staff. They panicked. The industry wasn't going as well. They thought, oh, we can't keep up with all this payroll. They hired some general contractors instead or subcontractors instead. And guess what? The business is failing. So the seller probably doesn't feel good about that. That's not what the seller wanted. They had to get out of the company, but they still wanted the legacy to last, the business to continue. They had, employees that have been there for a long time. They want, to maintain their employment, right? They want to see things work out well. The seller also had compensation tied to the deal, right? They still had ongoing compensation, seller note. They had some earnouts that was included as part of the deal. So they really do have a financial incentive for that buyer to be strong enough, right? And what does the buyer want from the lender, right? If they're financing, if it's not a cash deal, but if they're financing it, what does the buyer want from the lender? The buyer, they always come to me. Most of the time, I represent just the buyer. In some circumstances, like with the partnership here, I'll work with the seller and the buyer. But the buyer is always trying to satisfy the seller. The seller wants, and the broker for the seller usually wants proof of funds. They want to make sure, is this buyer qualified to buy this business? Are they going to be able to get a lender to approve this deal and close, so I'm not sitting around waiting for 2-3 months and then maybe have to go find another buyer right after that, right? So how frustrating is that if you guys finally find, you got a seller, you finally find a good buyer, you thought, and they can't even close the deal. And what if the seller says, you know what, forget it, I'm walking. Because I've had deals, once 5 years ago, or I should say 6 years ago now, right before COVID, the week before COVID, I was working on a deal for 18 months. It was a $30 million transaction. We were financing 15 million of it. But at the closing, after 18 months, the deal died. It came back to life. We had to find the right lender. It was a whole story. At the closing table, the seller, and this is a seller whose family was in the business, 40 years in the business, they got cold feet. They couldn't handle it. It was emotional breakdown, and they walked. But it took 18 months. I mean, if we would have done that 2-3 months earlier, there's a good chance it would have got closed. But it just didn't align that way. So what does the buyer want from the lender? They want to know that they can actually close this deal, and in good time before the seller walks. They have an LOI. They have a deadline on that LOI. What if it expires and they can't get it renewed? They just wasted their time. They might have put a deposit down, right? They might have put a deposit in escrow. They may have paid legal fees, other consulting fees. They've already put money out into the business. But again, this is where I come in. I'm right in the middle of that buyer and the seller, and between you and getting this deal done. So that's my role. And just to expand on what I actually do, because again, I don't sell anything, but I've been in sales for 20 years. But what do? I provide financial strategies for buyers to finance a business acquisition, which I do acquisitions. So I finance business for purchase, right? So acquire, growth capital, because a lot of times these buyers will get into the business. They need to have money to, first of all, operate from day one, so they need working capital, and they want to grow the business. They're not buying it just to maintain everything the way it was. They're buying the business to grow the business. And then I also help with exit planning. So acquire, grow, exit. These are the financial strategies that I provide solutions for. And that's how I help people get what they want. And I'm going to go over one type of financing that's really going to be very applicable to you guys, which I know that Nick has mentioned. And the most common type of financing is really going to come down to something called an SBA loan. Now, you guys have probably all heard of this, the Small Business Administration SBA loan. Now, with SBA loans, there's many different versions of this, but the most common type of SBA loan is called the SBA 7A loan, okay, the 7A program. Now, it starts technically at $250,000, although there's a version that can do a little bit smaller than that. But for the main purpose, the SBA 7A starts at $250,000, goes up to $5 million. The $5 million is the max that a borrower can have, meaning they could buy 2 or 3 businesses. They could have business acquisition. They can get a working capital loan. They can do any of those kind of things up to $5 million. They can't have more than $5 million.
At one time.
Correct, yeah. They could pay down balances. They just can't have more than $5 million at any time. A lot of times the buyers I should say, like a buyer group. I've had a guy right now that I'm dealing with. One of the owners is going to have, he's going to have majority ownership, and 2 of the owners are going to have 19% of the company. Yeah, because anyone who has 20% or more equity in the company has to personally guarantee, and that means if you're signing for the loan, then that counts towards your balance. So some of these guys are trying to be creative out there, and they're holding less than 20% equity. They're partnering together. But just keep that in mind that if you have some partners, maybe there's a capital partner. Maybe there's a guy that has all the money, for example. He doesn't want to personally guarantee. Okay, you got 19% or less, right? You don't have to guarantee. You could put up the capital. You might find some sellers that want to stay on as part of the business afterwards. They might want to hold some of that equity. If it's under 20%, they don't have to personally guarantee for the duration of the loan. But these are just some of the really basic guidelines, and I can get you a lot more information on what these are. But again, the beginning part is 250 to 5 million. Okay, so that's where these deals fall out. Some of these smaller transactions, you might find cash buyers. Sometimes it's easier, but maybe they need to finance it, so we'll do smaller transactions. But the ones that are, $1 million, $2 million, $3 million, and up, how many cash buyers are really going to have that kind of money? And even if they did, do they want to spend it? You know, they may want to still finance, right? So on the bigger transactions, that's where these loans really come in. 10 to 25-year terms. 10-year terms, if they're just buying the business, getting working capital, you know, refinancing some debt, 10-year terms. If they're buying real estate with this loan, they can get 25-year terms. Now, it has to be for a business purpose. Can't be investment kind of real estate, just for business purposes, so the business occupies the property. If at least half of the loan goes towards the real estate, we can get the whole entire loan as 25-year terms. If less than half, like for example, the one I was just talking about in December, $2 million of the deal was the business, $1 million of the deal was the real estate, $2 million, 10-year term. The $1 million for the real estate, 25-year term. Closed at the same time then, right? So,
Wait, say that again. So when you have, because this is important for them to know.
Yeah.
Also for me to know. So you have real estate and you have your business.
yes,
So we have a $3 million business.
yeah,
$2 million business. 1.2 is in real estate. 800 is in the business.
yeah.
The loans would be different terms.
In that situation, if it's 1.2 million for the property and 800,000 for the business, then more than half of the loan is going towards the real estate. That means we could potentially get the whole thing on 25-year terms, which means a lower payment for the client.
That's what I want to do.
And that could be huge for the loan payments and just closing the deal.
Well, 25 years is a lot,
Yeah.
lot
Well,
more time.
yeah, it's just
Lot
that
lower payment.
it's of the percentage of the businesses that we do, how many have real estate in them.
No, I know. I was just
Yeah.
trying to tell you. Yeah. Well,
Yeah,
let's
and they
say
can.
it's-
Matter of fact, you know, there's a large deal we're dealing with for one of your guys, and it's out of Oklahoma right now, and the real estate is valued at $5.2 million. It's going to be like an $8.5, $9 million total sale. So it's just a good example.
Yeah.
On the interest, is that like percentage change from like a 10 to 25 year? Like,
Interest rates, and I'll get into interest rates in just a second, but it's not going to be a huge difference, you know, for the 10 to 25-year term, right?
Now, let's say the opposite. Let's say the business is worth 1.2 and the real estate is worth 800.
Yeah, vice versa. The business is worth 1.2, 10-year term. The 800,000 for the real estate can get 25-year terms. Now, here's another interesting part of that. If the business is already occupying the property, like for example, this example I'm giving you from December, the business was already occupying the property. We can get 100% financing for that, for the property. And then they only have to bring a down payment. Now, that brings me right here, 90% finance.
On the property and the business.
Yeah,
100%
so let me
financing.
explain the finance, the percentages. So SBA loans on a business acquisition will finance 90% of the purchase price. So if it's 500,000, let's say, 90% is 450 grand. The buyer's got to bring the $50,000. Now, there's some caveats to that. There's some changes, you know, and there's some new rules, and, you know, there's some exceptions to that, and there's different ways to break that up. But that's typically how it works. If your buyer has 10%, that's all they need, right? Maybe the buyer only has 5%, okay? So the seller would then have to hold a separate note, a seller note, right? So they're holding a separate loan agreement with the buyer, saying, all right, buyer, I'm going to hold this 5%, you're going to pay me this 5%. Now, with the SBA loans, there's so many rules that I can't go over every single rule right now. And there's some, you know, there's one specific rule that this seller note has to be on standby for the duration of the loan, right? These are little intricacies of these SBA loans.
You were talking about the 100%. I think that's important.
No, well, the 100% for the real estate, but for the 90%, right? If they don't always have 10% to put down, the lender may want a seller note involved, right? I know. So
So a note on the business.
yeah, seller note on the business,
But
right?
only the business. The real estate would be covered 100%.
Right.
The real estate could be, yeah, absolutely. So, and I'm just giving you these basic terms here to really make a point is that there's so many rules in these SBA loans that
It's crazy.
this is all that I do, and I keep up on all these rules, and our team keeps up on all these rules, so you guys don't have to. But you have to know some of the basics. But again, this is where I'm going to come in and help you guys close these deals, because the rules and requirements and all that, and how you explain it, you don't have to do all that with these sellers or the buyers, really. And I do want to point something out. The SBA, if you didn't already know this, is not the lender. The SBA is the Small Business Administration. They guarantee loans for these lenders, like an insurance policy. In case there's a default, the SBA will come in and pay that lender back, basically, for a certain amount. So in the SBA world, there's two types of lenders. There's banks, which is like, your Wells Fargo's, your Bank of America's, those kind of banks, your national banks. And then there's alternative bank lenders, or sometimes even non-bank lenders, right? The mainstream banks are going to be the most difficult to work with, right? Even our most established clients that have long-standing time business, profitable business, 30, 50 million, a year in sales, can't even go to their bank and get financing in many cases. Sometimes they have finance with their bank wants them out. So think about a small business buyer trying to go to their bank, right? And they can't get financing because their requirements are so high compared to non-bank lenders, right? They have the most conservative type of underwriting guidelines as far as credit, cash flow requirements, right? And what a lot of times what people will do is they will try going to their bank and find out that their bank, they can't get financing through. So what's the next place that they go? They go to Google and they type in business loan for acquisition or whatever they type in, and they get bombarded by different types of brokers and people who are trying to sell them something, and they never really end up getting what they wanted to get. They get confused. The lenders that we work with, though, are not these mainstream national banks. I mean, they're mainstream, they're large top 10 lenders, but they're alternative bank lenders. Their primary goal is not banking. They do have bank accounts, some of these banks, but their primary goal is not banking. Their primary goal is lending.
Are they private lenders?
Yeah, a lot of times they're private lenders. And what they'll do is they will have more aggressive underwriting guidelines compared to a bank. Lower cash flow requirements, maybe a little bit less on the personal credit, maybe less on the asset side, right? That's the type of lenders that we're working with. And again, when it comes to the client and they go to their bank, now they need to find out who's going to do this deal. Well, that's all that we do. Our company at Commercial Finance Partners, we're staying in tune with who's doing what types of deals right now, right? Because there's so many different types of transactions. You guys won't be able to keep up on who's doing these deals. Like, who is a cash flow lender? Meaning, who will do an airball deal, meaning no collateral, right? I know who some of these lenders are. Who are the lenders that will go above $5 million and do conventional loans called pari passu loans if the deal is $7 or $8 million? The average client doesn't know who that is. You guys probably don't know who that is. Nobody knows who that is, but that's all that we do. So we're staying in tune with who those lenders are. We know which lenders will do, asset-light deals. We know which lenders will work with a little bit challenged credit. If it's a transportation company, who's doing transportation right now? Most of our clients don't know, but we're in tune with all these things. So again, that's why you don't have to do that. That's where I come in to help you close these deals. So that's a little bit about SBA. I could do an entire presentation, which I'm happy to do, just on SBA for you guys, because it will be helpful. You had a question?
Do you pay points on these SBA loans?
Yeah. Oh yeah, we pay referrals. Last year alone, we paid over $1 million in referral fees to our referral partners. Absolutely. So here's Commercial Finance Partners' process that I'm going to get into. Now here's where I help you guys, because we're talking about what does the seller want from the buyer? What does the buyer want, from the lender? There's a couple things we can do. A lot of times with your guys' files at this company, I will pre-qualify the buyer, meaning, hey, buyer, I want to buy a business. Okay, send me your credit report, send me your personal financial statements, send me maybe some bank statements, give me a resume. All these things determine are you eligible as a business buyer? That you then can go and show a seller and say, yes, I have been vetted by a third party, commercial finance partners, and we will say, yes, this person meets the criteria for buying a business.
And it's a personal
And it could be
credit,
even a
not
personal
business credit.
side. Yeah, personal credit, like the buyer,
Right.
will give their
But not the
personal
business
credit. No, because the buyer, to qualify for a loan, they have to have certain credit requirements. Usually with SBA loans, for example, 680 credit is typically needed. So we need to know that this buyer has sufficient credit. They have liquidity. Because they've sent us their
But it's a
personal financial
loan,
statement.
Not in their corporation?
No, they're not getting a loan yet.
Okay.
They're going to get the loan to buy the business.
Yeah.
Yeah. Now, the loan itself, if it's an SBA loan, conventional loan, whatever loan it is, it's based on the personal financial, the person, and the business
Very
combined.
important. And the business.
Well,
Yeah.
right, because like,
They sign a personal guarantee. Listen,
Yeah.
they sign a personal guarantee.
Yeah, because if
Okay.
the person is a mess, they're probably not going to run the business very well either. So they do have to have sometimes experience. They need to have some liquidity. For example, I have a deal that we're running into liquidity issues. It's a $6 million transaction. There's 3 partners. They need to have 10% liquidity, which is $600,000 between the 3 of them, because they have to cover their living expenses, right? They can't just depend on this business. What if the business doesn't make it right off the bat? Something goes wrong. They got to be able to maybe kick in and make a few payments. They got to be able to support themselves, right? So lenders want to see the buyer has some liquidity. They're not just financing it all and they have no money in their bank account to live off of, right? Because then that shows desperation. They need to make sure this person has
Yeah,
good
maybe
credit
work real
because,
hard on the business.
yeah, what if they have tons of bankruptcies, you know? Yeah. But but things happen when a new buyer comes into a company. Well, there's a transition period. It may not be all that smooth right off the bat. So you got to make sure this person has some stability to buy a business. Like I was saying, we had a husband and wife. Okay, they've never ran a $7 million business. Did they have the personal qualifications to do it? That's what one lender said. Yes, they did. Right? So we can pre-qualify a buyer. Also, a lot of times what I'll do for you guys is pre-qualify the business. So you find a business, you're putting together all the financials. You're getting the storyline, right? You're putting together the SIM report, right? Well, one item that goes in there is a pre-qualification letter, and that's what I can provide you guys. So we take the business financials and the tax returns, we get all the add backs, and we start to run it through our system and do all the financial analysis. Then I can provide you a letter saying this business qualifies for X amount of financing, pending, lender review, pending, the buyer is qualified to buy this business. But then the buyer that you're showing the SIM report to sees that the business financials have been vetted by a third party and they're pre-qualified, right? So that's where I come in. So it's not just coming from you. You're going to do some level of the due diligence and let them know that, hey, yeah, they are, qualified, right? But if it's coming from a third party, it holds a little more weight sometimes because it's not just you telling them what they want to hear. It's someone else saying, yeah, they are qualified.
Is there a set price on pre-qualifying a business, or is it all just by case?
Oh, there's no cost for us to do the pre-qualification, right? So this doesn't take us a very long time, but it's worth our time because if they're qualified, well, who are they going to get the financing through? Through us.
Okay, so there's no cost.
Yeah,
So-
and most of the time, I'm not dealing with the broker like you guys, right? I'm dealing with the buyer. And the buyer says, hey, I just got a letter of intent with a seller, right? Can we get this pre-qualified so I can show the broker and the seller that we're pre-qualified for a loan? And so I'll take their personal information, I'll get all the business information that they have, and then we'll pre-qualify the business and the person. And by the way, that's called a global cash flow analysis. They're looking at business and personal, so global meaning everything, right? So business and personal. But I can do one or the other, or I can do both. And that's how I'm going to help you get a deal because the seller, they're going to want to see a qualified buyer. And so we can vet that out, right? The next part of our process, if I can go to the next slide, is going to be our internal process. And the internal process is data processing, right? So we get the information. Data processing for us takes all the information, puts it in our system, and runs all the analysis. It's like an overnight, by the next day type of process, okay? After that, we will have an internal underwriter assigned to the file. And the internal underwriter is with our company and going to act like an underwriter that would be from a lender. So we're going to try to ask certain questions that we know is going to be asked, right? We try to get any supporting items that we know is going to be needed at some point. Because if we can vet all that out, and this is by the next day, by the way, so it's a very fast process. We're not taking a long time. But if we can vet that out, then we know all the characteristics of the deal, and we can do strategic lender placement. So we don't have to shop it around. If you guys went to one bank, and that bank doesn't like this deal, then you have to figure out who's the next bank to go to. And as I mentioned earlier, there's so many different types of lenders, and they all have different credit boxes. So how do you know which lender is going to like this deal? But because of our volume and the experience we have in the track record, we know which lenders are closing what types of deals right now. So if we send it to that lender, we have the package put together. We got the write-up, we got the financials, we got the documents. We're buttoning it up and sending it to them in the way they want to see it. We usually have a very high success rate at that point. You got a question?
You said that one buyer, like if you had to go like through like 5 different
Yeah.
lenders, is there like a point where you're like, okay, like
Yes.
Nobody wants it.
Yeah, there is, yeah. And sometimes it's when you start seeing the same feedback over and over again, and they can't overcome that. Now, the only times we shop around with more than one lender at a time is usually when time is of the essence, or there's some reason why we really need to just get an offer as fast as possible and just, go to a few different lenders and see what gives.
But that
But-
couple, you got to like 5 because you like believed, okay.
Yeah.
that's it, okay.
Yeah, we believed in this deal. We knew that, okay, this is going to get done, and we ended up finding a very aggressive lender that was interested in doing it. Yeah. So the lender placement is the part that you guys aren't going to be able to figure out who's doing what types of deals, and you shouldn't have to spend time doing that either. You need to make sure the buyer you have a buyer lined up. You may have to make sure the seller is at bay and they're comfortable. You got to hold those pieces together. I'm doing the same thing too. I'm representing the buyer to help them satisfy the broker and the seller, and making sure that the seller doesn't walk away from the deal. Right? Time is of the essence. But this is all that we do. So instead of you guys doing what we're doing, we're an extension of your team, right? We're part of the process that you have. And again, if this is all that we do and you guys are doing what you do, you have more time to go find more deals, right? And just outsource it to someone like me to get the deal done.